So for sales, our double entry, they said goods sold for cash or check. If goods are sold for cash or check, we're going to have our double entry as usual. We're going to have sales account and cash or bank account. Whenever we sell, because we are selling out, we are giving out to the customer. Our sales account will have a credit entry. And we will be receiving cash or check for those goods that were sold. Yes or no? So our bank account or cash account will have what? A debit entry. So the double entry is clear. Sales will be debit or credit entry. Cash or check, bank will be what? A debit entry. So that's what they said. Whenever goods are sold, the sales account will be credited as the goods are going out of the business, and the sales account is giving out the value. So the double entry will be a debit in either of the cash account or bank account. So goods sold on credit. When we sell on credit, we're still going to have our sales accounts to be a credit entry. But instead of having a debtors account or a trade receivable account, or instead of having cash and bank account, we're going to have trade receivable account. So our trade receivable account will have a debit entry because our debtors are receiving those goods from us. Do you get it or not? Mm-hmm. So we'll go to the question. I just sold goods 175 for cash. I just sold goods. So we're going to have sales account and cash account because they were on cash. So your cash account will have a debit for sales of 175. And your sales account will have cash of 175 on the credit side. Is it clear? Mm-hmm. Now, I just sold goods 770 on credit to Prerna. So here we're going to have Prerna as our debtor, which is trade receivable account, and the sales account. So the sales account will have a credit, and Prerna's account, which is trade receivable account, will have a debit entry. Is that clear?
This one, the first one, is credit.
Which one? On the 16th? Are you talking about 16th or 17th? 16th, we're going to have sales account and cash account.
Yeah, the 16th.
16th, we have sales account and cash account.
No, the cash account. Cash account.
The sales account we have credit. The cash account we have debit. You receive cash. On the 17th, I just sold goods 770 on credit to Prerna. So we're going to have sales account, which is a credit, and Prerna's account, which is going to be a debit. That's trade receivable. Is it clear? So your sales account, we have two things in our sales account already. We have the cash of 175 and Prerna, which is 770, who is the trade receivable. Then the Prerna's account. Yeah, what do we have again? So Prerna has received cash from us, has received goods from us, which is a debit. As soon as Prerna pays, Prerna is going to be on the credit side for Prerna because Prerna paid money, either cash or bank. So if Prerna pays cash, our cash account will have a debit. And if it is bank, our bank account will have a debit for Prerna. And Prerna will have bank or cash as a credit for that amount paid. Then you can balance the account. Do you get it?
Yes. So she paid at 20th of January, she paid 500.
Yeah, she paid 500 instead of 770. So you record it.
Yes, and then we do the balance.
You balance. So she's still owing 270. That will be balance brought down.
Yes.
Is it clear?
Yes. Return.
Now we go to
Purchase.
returns. So for returns, we have sales returns and purchases returns. When we say sales is what? A credit. The sales returns will be what? A debit, because we are receiving those goods that we sold to our credit customer. They are returning it. Goods can be returned for different reasons. One, goods can be returned because the quantity needed exceeded what was supposed to be given. So we ordered for 500, we got 700. So we have to return. So goods are returned if the quantities needed or the quantities are more than what was ordered. Another reason why goods are returns are maybe they are expired. So if they are expired, you return them. If you don't, your invoice will be reading such amount, which is a loss for you as a creditor, as a debtor, sorry. Another reason is because the goods are not in good condition. They are not expired, but they are damaged. So these are the reasons why goods are returned, either to the seller or to the customer or to the supplier. Is it clear? So your sales returns will be a debit. Your sales return, your sales return, when you are returning goods, yeah, will be debit, and your purchases returns will be credit. I think it's clear. So that's where we're going to stop for returns today, for accounting.